Most Airbnb hosts are overpaying in taxes year over year simply because they do not know the rules. In today's video, I'm gonna share with you the top mistakes that Airbnb hosts make and how you can avoid them. Now, let's face it, the IRS, they're not fun to deal with, but we can also sleep good at night knowing that we're doing everything right. So let's go ahead and dive in on these mistakes and what you guys can do to avoid them. Mistake number one that I see a lot of Airbnb hosts make year over year is mixing their personal and business finances together. This is called co-mingling your funds. Now imagine using the same card for not only grocery expenses, but for Airbnb expenses. That's a red flag. If you ever get audited by the IRS, the bank statement will show both expenses for the grocery bill and for your Airbnb expenses. So you do not want to do this. This is going to create a lot of problems, and you want to make sure that you avoid this by any means. So what do you do to solve this? I highly recommend opening up a business bank account that's solely just for your rental properties and keep your personal income and expenses completely separate. Whenever you need to transfer money from the business account, just simply make a wire or a transfer to your personal account. If you ever have an audit, you'll have trouble showing which expenses are personal and which ones are business. So here's an actionable tip. Open up a business checking account and a business credit card solely dedicated to the Airbnb or short-term rental properties. This way you'll keep everything clean. You'll know exactly what's business, and it'll save you a lot of time when it comes to filing your taxes. One other thing that you can do is open up a family management company. And in this family management company, you can now get an LLC for it. When you get an LLC, not only will you be able to get an EIN, which is an employer identification number, but this employer identification number, along with your LLC, will allow you to open up a business checking account and a business credit card. This way, all of your business income and expenses will go to this business checking account. That way you can take expenses such as fuel, maintenance, repairs, anything that is associated with the property will come out of this account. It'll make it easy for you to categorize the business expenses for you when it comes to tax time. Is failing to report and deduct 1099-K forms. In the past, 1099-K forms were released by the IRS if you are a host making over $200,000 and over 200 transactions. As of 2024, the IRS now states if you are a host making over $5,000, you will now be issued a 1099-K. Now, you want to make sure that you report this 1099-K because Airbnb will send this form to the IRS, and you want to make sure that you file the 1099-K form as well. Now, the mistake that I see a lot of hosts make when it comes to this 1099-K form is that they fail to deduct the Airbnb or short-term rental platform fees. Now, when you post your property on these platforms, they take a fee every single year for their platform fees. The reason why is because they're marketing on your behalf, essentially. So in return, they take fees for this. Now, you want to make sure that you're taking advantage of this deduction throughout the year. So here's an example. Let's say Airbnb pays you $10,000 throughout the year, but takes $1,000 in service fees. So when you are doing your taxes, please make sure that you take the platform fees and you deduct those so that way you're not overpaying in taxes. Now, mistake number three that I see hosts make is not taking depreciation. Now, let's explain what depreciation actually is. So depreciation is a cool way of saying that the IRS allows you to take the value of the building and write it off over a certain amount of years. Now, for rental residential real estate, the IRS, they allow you to deduct the property over 27 and a half years through depreciation. So let's say you have a property that is $300,000, the building, not the land, because you can't depreciate the land. It was there before the building and it'll be there after the building. But they allow you to depreciate the building. Now, let's say that property is worth $300,000. You get to deduct that property's value over the course of 27 and a half years. That's around $10,900 a year that you get to deduct over the next 27 and a half years. Now, this will add up and it'll be tens of thousands of dollars that you get to save on your taxes, and you want to make sure that you're taking advantage of this deduction. It's an overlooked one, but it can save you massive amounts of money. And if you need a tax advising company, if you're a 6, 7, or 8-figure earner looking to keep more of what you earn through tax planning and tax advising, our firm does that. CEO Haven, we're the #1 firm for entrepreneurs, investors, and creators like yourself. So make sure to hit the link below and book a free consultation with our team and see how we can save you $15K or more a year, guaranteed. Now back to the video. Mistake number 4 I see hosts make is poor record keeping. I know bookkeeping and accounting is not fun, especially for entrepreneurs. And trust me, I'm no different than you. I don't even like doing my own books. But it's something that you need to do for several reasons. Number 1, you need to make sure that you're doing it because it allows you as a business owner to know what's going on inside of your business. You need to know how much money you're making and what your net profit or your net loss is every single month, every single quarter, and every single year, so you know what decisions to make as the CEO of your business. Having disorganized records, it makes it very difficult to track your deductions and to categorize your expenses properly, which leads to missed opportunities on what you can deduct, and it can lead to a bad situation if you ever get audited by the IRS. Now, if you ever get audited by the IRS, they're going to want proof of your income and expenses. If you can't justify or show proof of those expenses via good record keeping, then you are SOL. If you can't prove your expenses, then you can't deduct them. It's that simple. If you're a host and you're doing things old school and you're keeping things like receipts and you have them in a drawer and they're all scrambled around, it's going to be very difficult for you to know what expenses were taken and the legitimacy of those expenses. So what do I recommend you to do as an Airbnb host? You have a couple options. Number 1, you can use Excel if you are a beginner and track your expenses the old school way. Now, there's nothing wrong with Excel, but it's not something that I recommend most people do. If you have a couple properties under your belt, or if you have good cash flow and you can afford it, I highly recommend using online software like QuickBooks or Xero to manage your income and expenses. It'll connect to your business bank accounts and your credit cards, and it'll allow you to categorize your transactions. So make the effort about 1 time a month to make sure that you're categorizing your transactions properly. And the last thing I recommend is hiring a bookkeeper if you can afford it. Hiring a bookkeeper is the ultimate cheat code because they will be doing this for you every single month. That way you can focus on what you do best, which is managing the property. They will give you reports every single month, like a cash flow statement, a profit and loss statement, and make sure your balance sheet is correct. Having clean records allows you to claim more deductions, and it allows you to make executive decisions as a CEO based on the numbers. Real estate is all about numbers, and if you don't know your numbers, how do you know if you have a profitable or a failing business? So make sure that you have your bookkeeping in order. Number 5 is ignoring legal and professional fees. Whether it's drafting contracts or getting tax advice, these costs should reduce your taxable income. So make sure that you're paying them from your business accounts. That way you can track them and you can categorize them properly. One client I worked with last year, she paid us $5,000 to do tax advising and tax planning for her, but she did not deduct it when she filed her own personal taxes. That's about a $5,000 deduction that she could have taken had she simply filed that on her tax return. Any professional service related to your Airbnb property is tax deductible. So make sure you are taking these expenses from your business accounts to make sure that they are being expensed. If you are an Airbnb or short-term rental host and you're making a lot of money, then I highly recommend it's time to meet with a tax strategist. Here's why. A tax strategist is going to look at your situation and see what strategies that you can apply to your situation to lower your tax bill. We'll see if you can use strategies like putting your children on payroll, how to max out your home office deduction, how to properly write off your business travel and your business meals, how to set up a family management company. These are strategies that a tax advisor will help you implement throughout the year to make sure that you are lowering your taxable income. One other mistake that I see hosts make is not tracking their hours properly to take advantage of a cost segregation study. If you are doing a cost segregation study, it's super important that you are tracking your material participation hours. A lot of hosts try to use the cost segregation study by either qualifying for the short-term rental loophole or real estate professional status. Now, I know that's great, and you want to save as much money as you can on your tax bill. You want to use these strategies to offset the active income that you make from your short-term rentals. I'm all for that, but you want to make sure that you are properly documenting your hours. This is the most audited thing when it comes to this strategy. This is a surefire way to lose if you ever get audited by the IRS in using one of these two strategies to offset your active income. It's all about documentation. So make sure that you have a log that's showing all of your material participation activities, and you're documenting all of your hours to justify and prove to the IRS that you are qualified to take this deduction. Now, some of these tips is going to be very overwhelming for you, and you want to make sure that you have a tax advisor and a strategist that will show you how to document all of these strategies. It's great to hear them and watch them on TikTok, but if you ever get audited by the IRS, you want to make sure that you have proper documentation and good logs to prove. Don't want to lose if you ever get audited by the IRS. So I highly recommend using an app like Reps Tracker to track your material participation hours. Another mistake that I see Airbnb hosts make is overlooking certain expenses when they file their tax returns. Some of the most overlooked expenses that I see hosts make year over year are the following: failing to report the business vehicle on their tax return by either using the actual method or the standard method. If you use the business vehicle more than 50% of the time to check on your properties or to do property management, then you can use the actual method, which allows you to depreciate the car, and it allows you to take advantage of other expenses in relation to the car, such as fuel, maintenance, insurance, tolls, you name it, in accordance to the business miles that you take. Or you could just simply take the mileage method, which as of 2024 allows you to deduct 67.5 cents per business mile that you drive. So here's a list of expenses that I see hosts miss every single year. Property management fees. These are fees that you pay to your property management company every single month. Cleaner fees. If you have a team of cleaners coming to your property, you want to make sure that you pay them a 1099 at the end of the year, and you take that as a contractor expense. Next is the home office deduction. I can't tell you how many times I see Airbnb hosts not take the home office deduction if they're running their operation in guest communications and property management from their home. If you have a space dedicated just to that, then you should be claiming this deduction. Marketing and advertising. If you are running ads for your Airbnb property, then make sure you are taking advantage of these deductions. Repairs and maintenance. If you have any repairs inside of your property or you're paying handymen, make sure you're taking advantage of these deductions as well. Another one is office supplies. If you buy a laptop or a phone, if you're using your phone for most of the time for business, then you get to write off the business portion of that cell phone bill. And that goes for any of your technological devices that you buy for your business as well. So I'm talking about your laptops, computers, iPads, anything that is in relation to the business. You get to write off the business portion of that tech that you purchased throughout the year. The next mistake that I see hosts make is filing on the wrong schedule. Now, I can't tell you how many times I see Airbnb hosts file on a Schedule C as opposed to a Schedule E. You need to know which one makes sense for you. If you're filing on a Schedule C, that means you're providing substantial services to your guests, like cooking them breakfast, driving them around, cleaning after them daily. So think of it like as if you were managing a hotel. But here's the thing. Most Airbnb hosts are not doing that. If you're not doing that, that means you probably should be filing on a Schedule E form. If you're filing on a Schedule C, you are also subjecting the income to self-employment tax, which is 15.3%. So if you report that you made $10,000 in income, you're paying an extra $1,500 in taxes that you do not need to be paying. So know the difference. If you're just renting out the property and not providing substantial services, then file on a Schedule E. Keep it simple and do not overpay on taxes that you don't need to. Now that you know the top mistakes that Airbnb hosts make, it's your time to correct most of these mistakes if you are making them. Stop leaving money on the table. Airbnb is not just a side hustle, it is a business, so you want to make sure you're treating it as such. So stop leaving money on the table and implement these strategies so that way you are setting yourself up for success. And if you like this video, please do me a favor. Hit the like button, comment, subscribe. And if you're a 6, 7, or 8-figure entrepreneur or investor looking to keep more of what you earn with high-level strategies, and schedule a free consultation with one of our team members, and we'll show you how to save $15K or more on your tax bill. I'll see you guys on the next one.